Jimmy, who do we believe? Kudlow with Chris Wallace, or the president when he says that first quarter GDP was actually helped by tariffs?
Yeah, I think that's exactly the issue. Larry was giving kind of a no pain, no gain argument. Yeah, there's going to be pain, but it's worth it to fix some of these trade issues, which have been plaguing America for 30 years. But then the president's tweets really are just the opposite. He said, yeah, that the economy seems to be doing just fine. Previously, he said that perhaps the tariffs are actually driving economic growth. And you know what? Hey, if the tariffs stay up, then all these companies, they just move out of China. That works for us, too. So that was kind of a win-win for America argument. And what I don't know is when the president tweets that, does he actually believe that? Or is this purely a negotiating tactic to tell the Chinese, hey, we'll just leave them up and we'll be fine anyways? I don't know that. It would be great to know that.
Jimmy, if this does become the extended status quo in terms of us having all of these tariffs in place on goods that are getting imported from China, does it actually create that scenario? Does it longer term mean that the U.S. economy becomes one centered around more manufacturing and more products being made here in the U.S. or being made in other parts of the world that are actually our allies instead of China?
Yeah, I mean, I think there are certainly people in the White House who would love to keep these tariffs on. Have companies begin moving to other nations, whether it's India or Vietnam, and then perhaps hitting those countries with tariffs to then move that manufacturing back to the United States. But the problem I have with a lot of sort of the static analysis we've been seeing about the impact of this trade war, I think that's what I think Larry Kudlow is giving. I think you need to do a dynamic analysis, not just the immediate cost of the tariffs, but the effect on markets, the effect on business confidence. Really affect on the long-term efficiency of the American economy. I don't think those things are in the model. So when you see that it's going to cost 0.2 percentage points, I think that's a very limited way of looking at it.
Yeah, Mike, from a market standpoint, I mean, just in terms of the sell-off we're seeing today, it's very, very broad-based. Obviously, things like the NASDAQ 100 are selling off the most, given all of those, tech and trade-sensitive names there. But the fact that it is so broad, is the read-through here basically that investors were not expecting to see this scenario that's been playing out in the last couple of days, or is that really just an excuse?
Yeah, I think it's fair to say, Morgan, that investors did not foresee this as a catalyst for a volatility storm at this moment. Of course, you never quite foresee that too far in advance. The market's response and the market's handicapping of the outcomes, I think, is very distinct from what ultimately might be the conclusion of whether economically and structurally this was a good fight to have waged. So I think that's another complicating factor. We can sort of say, this isn't really a big deal for the U.S. economy. But right now, if it's one more thing that causes investors to say, does this really compromise the global growth outlook? Does it mean we have to revise down and not revise up earnings estimates for the rest of this year? And what does it mean for our risk appetites in general as volatility goes up? Those are the things that I think can keep the market off balance in the interim, even if ultimately this comes to be kind of solidified into some kind of a status quo, a trade Cold War or something like that. Last week, the market treated this as an event that we had to get past, which was that deadline for tariffs and maybe a trade deal. We got past that. Now it's kind of a what now moment for the markets, and maybe just an excuse for a reset lower. I think it's like Brexit. We thought it was going to be, oh, no, we're not going to know anything for so long. We don't know what the new world looks like. And the market kind of got past the intense worry about it, and it became a new status quo.
Yeah. Jimmy, Mike says the one more thing dynamic. Do you go ahead with, we asked this to Kramer earlier, do you go ahead with auto tariffs on the EU later this month? What happens with Japanese trade and that deal? Does Iran start to become more of a pot boiler? All of those things.
Right. I mean, I think that's why it's really important. I think to the extent the president believes that these tariffs are working, why not continue to apply them? If he thinks this is an effective tool, he will continue to do it. And as Mike said, if this is not an event, all right, if this is a Cold War, if there is an emerging Trump doctrine, which will apply not just to China, but to Europe and to Japan going forward, the president needs to tell us this, not just tweets, not Larry Kudlow press conference, all of which we can glean information from. The president needs to tell the nation, just as Reagan did with his evil empire speech, here is what we believe about our geopolitics going forward with regards to China. That needs to be done.
You want an Oval Office address to the nation explaining exactly what we're doing here.
Absolutely. Just as previous presidents have done, and I think, again, of the evil empire speech, doesn't mean he has to call China an evil empire. But is this, again, is this about tactics, or is this about a broader, a broader reworking of our entire relationship with China? What does that mean going forward?